Hello, investor and trader. Welcome back to another episode. So it's been like 2 months since my last post. As always, I take forever to post. Sorry, it's been busy with life. But let's get back into the account. So this account here, I've been featured on this YouTube channel for the past 2 years, off and on, right? Because I don't really post that often. But if you recall, 3 years ago, my very first episode, I was trying to build this account up, and in that episode one, towards the end, I said let's try to get 175K in 5 years. Well, I managed to do that less than 3 years, so this is where the account is today at 174K. 2 months ago, when I made my last episode, is around like 144. So that was like around June right here ish, right? And of course, the market, I'm talking about the overall NASDAQ, because most of my stock are tech stocks. As you can see, in June, it took a pretty good hit. Well, it isn't that, well, NASDAQ 100, but it's pretty good enough. Let's go to the QQQ. Okay, right here. It was recalled during the month of July. It took a big dive. Well, same for me. I took quite a dive too, but not as much. Because I always actively change or change position or sell position and buy position. Same for right here too. You go to 1 month. Right here. This is with the sell off for last week, I think. Yeah, right here. So the market dipped like around 7%, 6%. My account dipped like 2 or 3%. Much better in the market. Why? Because I always in and out of stocks. I'm very active on this account for the past 3 years. Not like crazy active, like day trading. No, I don't day trade. I have a day job, but I do actively do buy here, sell there, so on, stuff like that. So if we can go to here, show you guys the performance. Fidelity is pretty cool. This new feature, it's pretty good. So year to date, you can see my return is 51%. I have not deposited any money into this account for like a year and a half to almost 2 years already, because in 2021 I was saving my money to buy a house, which I already did. I pretty much showed my house on my last episode. But anyways, so you go to 3 years. This account is almost 3 years, but not 3 years yet. You can see it start around October 1st, so next month, then there'd be a complete 3 years. Total return of 176%. Now I do the analyze compared to the stock market index, S&P only 10%. So I beat the market by a far margin. As I mentioned before, my very first episode, episode one, my normal return for the past, I don't know, 8, 9 years plus. I've been doing this for 10 years already, since 2014, 13 time. My average returns around 20 to 30% per year. And this is shown here on publicly, so it's 41%, which is pretty good. Now, I'm not saying that to brag or to something like that. No, I still consider myself as a okay. I'm doing pretty good, but not crazy good, but just okay. So let's just go some of the stock that I think could be a good opportunity to buy or trade. So if we can go to AMD. So the first thing about this graph is I use Yahoo Finance. I don't like this chart right here. Let's modify a little bit. So if I go here, go to candle. Yeah, I like candlestick formation better because I like to read candlesticks. And then I like to add some lines and stuff just to help me evaluate a company or evaluate the stock chart a little bit better. So 50 moving average, simple. Let's do exponential. Let's make this green. Okay. Let's do one more. These are moving averages. You can use whatever number you guys like. This is my preference. Exponential. I like to use exponential over simple. And then just do one more. I like to have three. Well, yeah, three is good. This is the last one, the 200 moving average. And I prefer this red. Alright. Okay, the way I pick a stock for 2024, or since the beginning when I start investing, like way back over here, has always been the same. Whenever a stock move up like this much, see how far it is away from the green line, the 50 moving average? I tend to avoid. I don't care how high I go, just don't buy it. Wait till it pull back, at least the first level. See how it pull back, the second level, and then the third level. Sometimes you get lucky, you go down below the red. That's only once in a while. But notice, I'm in the weekly chart, not the daily chart, the bigger time, the higher time frame. Again, same for here. That's why I don't buy AMD for above 200. I'll take profits. But now it's getting back to the 50 moving average. Remember, this is weekly, okay? Not daily, weekly. So this is the very first, I would say, a buy target around here, around 130, 135, and that's what I've been doing. I've been selling puts and collect the premium over time from options. But ultimately, I like to buy it down here at 110 or 120. That if pullback, it probably will. Who knows, right? The market, you can't predict the market, but that's how it goes. For example, like stocks like this one, I tend to avoid Nvidia. Now Nvidia has a good business model, but still, its stock is way overpriced. So just look how far it is from the green line. So that is why I don't really care how high Nvidia go. I would not buy or touch it. It's just too much risk for me. If you or I want this kind of result, slow and steady like this over time, just stay away from hype stock like this because you never know when it's the bottom or sorry when it's the top, and you might become a bag holder for most people or most investor or trader like this right here, like that right there. I tend to avoid this kind of stock. I don't like it. Hey, babe, that is your cup of tea. Go for it. For me, it's not. The next stock let's talk about is Adobe. Adobe just had earnings. Their earnings look pretty good, but I guess the guidance or something like that, or some kind of I don't know, whatever it is. The investors are not happy about it for temporary, but it's okay. Notice there's a like gap here, like gap here, gap here, gap here. Normally, stock like to fill in this gap. See how it gap down? Finally, it get filled up like another 3, 4 months. Okay, now we have another gap, but notice this gap right here. It's also another gap. So let's go to the daily, the weekly chart, a higher time frame. So 450, around 450 or 400 would be a better buy. But now it's hitting the first 50 weekly moving average at 530, 520. I would not buy some here. I like to buy some down here or sell puts. Mainly prefer 400 simply because on the daily there's a gap right here, which I don't like. Or sorry, around 460, 470. This big gap right here. So don't be shocked that if the stock can fall down and close the gap. That can happen. They call it gap trading. Another stock, the TEL, that may not. I don't think any YouTubers talk about this stock. This stock right here, they make connectors and stuff like that. You're an engineer like myself, you do know what this company does. Anyways, in the long term, it looks pretty good. So this stock, I began buying some shares around 140 level already, but this stock is not those hype stock. It's pretty slow, pretty boring. So they have a lot of patience for this stock. Again, see how it is right there? Looks pretty good. That'd be ideally I'd like to build a position down here, but haven't hit down there all year long. But we'll see. Once in a while you can see here, right? The stock does go to the red 200 weekly EMA, so around 130, 128, 127. Best thing to do is sell put, cash secure put. What I mean by that, don't do naked put unless you're very, very experienced or your broker allow you to do it. Okay, so yeah, that's pretty much what I have for you guys in this video. But that's pretty much the overall how I analyze this stock. Just look for a good solid company, good foundation, good fundamentals, good technical analysis. Whenever a stock pull back like this, buy, buy, buy. Don't buy when it's far, far, far away, especially like at least the far away from the 50 moving average, because it's like a rubber band, it'll snap back, and it will. It's just a matter of when. And don't be chasing because that's a bad strategy. The whole idea of this is stay consistent, stay I guess disciplined, and don't chase. Never chase a stock. Let the stock come to you. By doing that, you sell put. By selling put, you just wait and continue with your daily life, right? I mean, no one can sit there and babysit the computer or babysit the stock chart unless you're an active day trader, which I'm not right now. I haven't day trading in a while, but for my the way I trade, pretty much same thing as day trading in a way. Just wait for the pullback, wait for the reversal, wait for confirmation, and then jump in, right? And build your position slowly. Don't just go all in on one time. Buy some here, buy some here, buy some here as the stock falls, because that's how your dollar cost average down, and then eventually the stock goes up. That is how it is. One last one, SPY, the SPY index. For those scared to do options trading or just do SPY options. Yeah, it'd be very expensive though. $500 stock, 100 stock, be like around 56K. But you can go around with selling calls, selling put on SPY long term. it just like it always goes up in the long run. That's just how the U.S. economy works. But notice right now it's far away from this 50 weekly EMA, so I do expect a pullback in 20 soon, maybe 2024. Sorry, 2025 coming up. It probably gonna pull back here because it's been quite far already. Just like right here, see how they keep going up, but then this sometimes hit the red because this is during COVID. This is the part government shutdown sometime around here. There's always stuff going on around the world and causes stocks to go down. But if you have the patience, it will go down. Just like we here last year, not 2 years ago, 2022, a massive pullback for the overall market. So the same thing for this one. But it did. You stay away from hype stocks. I can guarantee you, almost guarantee you, your performance, your account will always go up. All right. See you guys in the next one. Bye.